Hey guys, it's Jonathan. Thank you. Thanks for joining me today. Kind of just more customer appreciation, subscriber appreciation class. So I am running a brief poll. It requires one click of the mouse. If you would be so kind and participate in my little game, I would appreciate it. I think we could see 79% of the people on here have participated. So if you haven't, please just click yes or no. You don't have to put your name, you don't have to put your email. It's just for my own selfish good. All right, guys. Thank you. All right, we're up to 90%. Let's get a few more people just to say yes or no. Please let me know. Are you a member? Are you not a member? Awesome. Okie dokie. Let's close this thing down. The results, 55% members, 45% non-members. What does that tell us? What does that mean? I don't know. It doesn't mean anything. I just was curious. Okay, let me get this out of the way. How do I do this? Do I close this thing? Just give me a second. Do I hide that? Screen. Come on. There we go. Everyone can see the screen. Everybody can see the screen. You guys can hear me okay? Excellent. Excellent. That makes me happy. Let me read a risk disclaimer, guys. I'm going to do things a little bit different today. But risk disclaimer, I'm recording this. I'll send out the recording. Hey, Anis. Trading or investing carries a high level of risk. It's not suitable for all persons. Before deciding to trade or invest, you should carefully consider your investment objectives, level of experience, ability to tolerate risk. So as we know, guys, these are educational presentations. Whenever we talk about specific trades, it is just where I see value in the market. Please don't take it as a trade recommendation to any one person. Let me also say there's a school shooting going on right now in Santa Clarita, California, in the US. Just, words can't express like the sadness when I hear things like this. So I don't know. I can tell you that's definitely in the back of my mind. Just so you guys are aware, it's going on right now. I think there's 7 people shot already. It's freaking crazy. For somebody, I have an 11-year-old and a 13-year-old. So I can't imagine being in a situation or them going to school and having to be taught what to do in the case that one of their classmates is going to bring a gun to class. But terrifying stuff. With that being said, let me move off of school shooting. So what I wanted to do is just have an open class for everybody. Oftentimes we'll do marketing webinars where I'm talking about different products. This is not that. There's nothing for sale. This is for you to get familiar with how I find trades. I got a couple of trades that I want to share with you today. For those who like the trades, that's awesome. For those who don't like the trades, that's perfectly okay as well. When I share trades of what I'm looking at and what I'm looking to do. I'm not trying to convince you that the trades that I like are trades that you should like. Hopefully that makes sense a little bit, but I share trades. I'm showing you just, hey, this is what I'm looking at. This is why I'm looking at. This is the reasons. And if you don't agree with those, again, that's perfectly okay. Okay. Hopefully you learned something from it. Okie dokie. I'll give you a little overview for those who are not members. We have half of us who are members, half of us who are not members. So the way the membership works is every Sunday I share the Sunday week ahead. That's what's in front of you. Every Sunday I share, 8 to 12 trades that we're looking for the week. And each one of these trades has been thoroughly researched. It probably takes me about 5 hours to put this together. And I share it with all the members every Sunday. And then every Monday we get together for a live class. The most important thing for me whenever I'm looking for a trade is the reason why we're in the trade. And you'll notice, or you might not notice because it's tough to read probably, but every trade that we do, there's a reason for why we do it. So it's not going to be enough to do a trade just purely based on technical analysis. And so I'm going to share with you one trade. We'll go through and then we'll see if we have time for the next trade. But I just want to share the process of how I find trades. And then I know many are schooled in technical analysis. Maybe if you're somebody who relies on technicals, all I'm saying is dig deeper, go a little bit further in your analysis, and then use technicals after that. So the question is this stock trading or is this options trading? So stock trading and options trading is the exact same thing. Every single person who trades stock needs to learn options. Every single person who trades stocks needs to learn options. It's the same exact thing. The only difference in stocks and options is if you're in a stock, we're in DDS, which has been an awesome winner today. DDS, we've had it since September 2nd. They just had blowout earnings. If you're going to do, just to answer a question before I start getting into the different trades, stock's at 75 right now. If you buy the stock, you can buy it, right, for $75, $74.98. Options just let you buy it at different prices. An option you can buy at 77.5. You can buy a stock at 80. You can buy it at 85. You can buy it at 60. All an option does is let you transact at these different prices. So options and stock and options are the exact same thing. If you are learning from somebody who trades stock and doesn't understand what options are, I think that's a red flag, right? If there's a professional trader, somebody says they're a professional trader and they trade stock and they don't understand options, or they're not well versed in options, I can say with 99.9% certainty, they are not a legitimate, real professional trader. No freaking way. Somebody is just trading stocks around and doesn't have the fortitude to learn options. That's just silly. So we're gonna do something a little different now. We're gonna watch a 2-minute trailer of a movie coming out. All right, guys, you were able to see that? Okay, cool. So that movie is starting to get a lot of press. It comes out November 22nd. Now, this story has been out for a while, right? I mean, this is talking about something that happened years ago, but it's still ongoing. PG&E. PG&E has had its trouble lately, right? I mean, obviously with the wildfires, but PG&E right here. Anybody know what this date is? If anybody gets this, this would be a really, really great guess. I'll give you 10 seconds because I don't think anybody gets this. This is impossible. What do you think this date is? Now, this question is kind of unfair. Remember the movie Erin Brockovich, guys? Do you guys see Erin Brockovich? Great movie, right? Really good movie. The circle here was the date that Erin Brockovich came out. She was a whistleblower, PG&E, same kind of thing. The story was already out. But what ended up happening after it got, right, not only, like these stories get notoriety, right? But it's not like this movie that's coming out November 22nd is coming out to be an Oscar contender. Like it's already an Oscar contender. So hypothetically speaking, the movie makes $100 million or does really well. It's going to bring so much attention to this story. And so just like when Erin Brockovich came out, the news about P&G was already out, but then the public gets involved. And then the public, the public wants people's heads. And so this is the only thing I really had to go back on to think about, what happened previously. So it happened with PG&E, fine. The stock got absolutely destroyed, right? From 30 down to, like 6 or 7. It rebounded over time, but whatever. Now let me take this away. The movie's called Dark Waters. Let me take this away. And now let's look at Dupont. So far, so good, guys. Pretty cool, right? So the whole idea of trading and what I do with the week ahead is I'm looking for stories. I'm looking for stories that have what we refer to as a catalyst. And that catalyst is going to bring attention to that story. So for instance, a very basic catalyst is earnings. So when earnings comes along, you could expect more movement in whatever stock is releasing earnings. That's a catalyst. Another catalyst is a lockup or a news release or whatever. So Dupont over time has traded lower, but now there's a major, major catalyst coming out. And so, yeah, so Anis, that means absolutely nothing to me. Okay, like even this comment, and Anis, I'm not picking on you. I just want you to understand, like Anis says, DD as a triple bottom. For anybody who's going to trade a triple bottom or a double bottom or a double top, think about this. I have a 10-year-old. How long would it take me to teach my 10-year-old what a double bottom is? 30 seconds? So, I mean, right? I don't know how to explain just how rudimentary most technical analysis is. And the fact that you guys are smart. Collectively, you're a smart group. But if people teach you something and they say it confidently enough, it becomes gospel. But what I want you to do is fuck all that. Like, forget all that. Use your mind. Like, why would a triple bottom or a double bottom mean a stock's going to rally? It's been there one too many times. It doesn't want to be there, right? There's no reason. So depending on, and I'm going to go on a little bit of tangent, which I'm trying not to, but of course I have it. Whatever time frame I put on, I can show you double bottoms and triple bottoms and head and shoulders and breakouts. These gurus are just looking, it's a hustle. It's absolute hustle. I can put this on a 24-minute chart, and I could put it on a 73-minute chart. I could then put it on a 222.5-minute chart to try to find whatever I want to find. Okay? So they really are meaningless. They're really that meaningless, Chris. It's just subjective. So give me the benefit of the doubt here, and let me go through the story. Let me explain why I think that there might be some trade opportunities for us. And again, just like I said in the beginning, if that idea resonates with you and you make the decision to do a trade, hey, that's cool. If that idea doesn't resonate with you and you want to paper trade it or follow along, that's cool too. And for others who think that this idea is just absolute utter garbage or nonsense, I'm cool with that too. I just want to explain and go take you through the process of how I go about finding trades. Okay? And what I've seen more from the professional side. So Dupont. DuPont's got hit over time. But again, in the next week, there's definitely a catalyst. Even like you guys are in the market, you're looking at charts, you're active traders, many of you, but you still didn't even know that a week from now there's this major movie coming out that could get DuPont in quite a bit of trouble. But as I'm researching this story, I learned some things. And the key thing that I learned, and I'm just trying to get the article for you, is DuPont did something very, very squirrely. And what DuPont ended up doing because of this lawsuit is DuPont spun off the company that has the liability for this case. So DuPont, it's still going through the court system because that new company that got stuffed with all the liability is now saying, hey, DuPont, this is bullshit. You can't pummel us. You can't bury us with all this. So DuPont spun off Chemours in 2015, stuffed them with all the liability related to the water pollution caused by, this is going to be the buzz term, PFAS, perfluorinated compounds, whatever. So what's going on though is at first glance, and as soon as I showed you guys the trailer, I had 3 people say, buy puts, DuPont's going down. Go deeper, learn about the story, figure out where they are as far as the lawsuits. And it's still going on. And I think DuPont put away, or Chemours, it's called, put away $670 million to fight this. And it's not enough. Because if we look at Chemours, this is what it looks like. I'll get a little bit more data. So here was Chemours. Now they're facing all of this liability. And so, in my opinion, the trade is not in Dupont. The trade's going to be in Chemours. And so what we could also do, and we do this a lot, is we want to find correlated assets. And if we find correlated assets, we can start comparing one to the other. And if we compare these two, let's go back and look for 2 years. And so comparing the two, Chemours is the purple and Dupont is the yellow. You can really see how Chemours, word's getting out. They have the liability. They're the ones with all the risk. So rather than look to short Dupont, if anything, I would want to consider shorting Chemours, CC. Now, another piece of the puzzle, which I came across, and again, I spent a couple of hours on researching this already. You know, this is a story that I've really been diving into. I like it. Makes a lot of sense. I love that there's a catalyst. There's an article that came out in Barron's September 11th, and I'll put this article in the chat. Maybe read it after or go through it now, whatever floats your boat. But a really good article about the value of Dupont if it's forced to break up. We expect Dupont to look very different than it does, suggesting that the sum of all the parts is going to be well more than the value that it's trading at right now. But if anything, after this movie, I think Dupont might get dragged down along with Chemours. But when that happens, in my opinion, I actually think Dupont is going to be a good buy. So I think Dupont is something to watch out for to buy. But then as far as a trade, the trade that would make sense to me, and let me pull up the options chain. For those who aren't members, I'm always gonna, so here's my DDS trade. I'm long the 65 calls and short the 77.5 calls. Making a cool 20K. Boom. It's always fun. I want this thing to go directly to 77.50 tomorrow. 1 day left. Awesome trade though. Thanks. You guys have DDS? Who here had DDS? Who here has made money on DDS? Yes, you guys are awesome. 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 Ah, you guys got out early. Don't get out early. Awesome. Congrats to all of you. Congrats to us. Yeah, I crushed it. 20K on this freaking thing. But I regress. CC. So if we go to Chemours, and Edward is saying there's unusual options activity on CC December 17 puts. Well, you don't, yeah, I don't, December 20 puts. Eddie, am I not looking at December 20 puts right here? This is, there's nothing here. This isn't, yeah, that's not unusual options activity. December 20th. All right, this is just holding me up. There's no unusual options activity here, guys. That's right. Okay. I think we're going to need time. Yeah. Why is this? We don't even know what it is. What is it? When were these done? You can't just see big volume and just assume that it's unusual option activity and it's going to tell us anything. This tells us absolutely nothing. When was this order done, guys? For everybody who's saying this is unusual option activity. So what? Yeah. Okay. All right. I'm gonna stick to what I get thrown on these tangents. Okay. This tells you nothing. Okay. Unless somebody can tell me a reason of why this tells you anything, you can't just say, hey, look, there's 5,000. That's unusual option activity. Okay. This is not a buzzword. Shimors, I'd want some more time. I'd probably go out to January. I like any of these. $1.10 right here, 75 cents right here. I would buy these. I would ladder into the trade. So for those who are interested in this idea, for those who want to paper trade the idea, this is exactly how I would do it. I would figure out what I wanted to risk. Okay. Say I determine that I want to risk $1,000. And again, I want to risk $1,000 in this example, but I don't want to lose $1 more. Okay. I don't want to risk $1,500. I don't want to risk $2,500. Max risk, if I'm wrong, I want to risk $1,000. That's something that I'm comfortable losing. So I would do it in 3 tranches, which would be 3 different trades, 1, 2, 3. The first trade I would risk $300. Then I'd risk $300, and then I'd risk $300. So trade idea might be buy Jan 17 strike puts 3 times. $310. Okay. Trade 1. These 2 I would wait. I would just chill out, guys. Knowing that I want to risk $1,000. So if Shimura's CC rallies up to 20, you do the next level and you slowly ladder into the trade. With the number one thing is I ain't losing over $1,000 no matter what happens. It's going to be physically impossible for me to lose more than 1,000 because I'm not going to allow my risk to be over that. Okay. I encourage you to research the trade as well. That's will get you started. I'm getting a bunch of questions on the Facebook room. The Facebook room is the coaching group. The coaching group is application only. We open it up every couple of months, but this trade was originally shared in not in that one, in the coaching room. And then, we talk about our different ideas. Okay. We talk about unusual options activity. This was DDS. Wow, okay, so there you go. Does that make sense, guys? Does anybody have any questions about CC? What do you think? On a scale of 1 to 5, and I'm not going to be offended. 1 to 5, how much do you like this? And not how much do you like the trade, just the story and looking at trades with this kind of mentality. And you could say, 1, guys, I'm a big boy. I got thick skin, I promise you. It won't affect me at all. But interestingly enough, here's another thing we can do while those answers are coming in. For those out there who do look at themselves as a talented technician, what you can do is use your technical skills to find entry points into the trade now that you have a bias. We have a bias that a story that's been known is going to get globally known. People are going to get really aware. Also, look at the time of history. Has climate change or the quality of water ever been a bigger discussion point than it is today, right now? No, right? So that's also going to give reasons for volatility, for movement. So when you buy options, when you buy a put, when you buy a call, not only if you buy a put or you want it to go down, you also want the uncertainty to rise. And you want that premium to get baked in there. So that's another reason of why it makes sense. But you can use your technical analysis, skills in order to find places to get short, if that's you. So Peter's saying, does January take enough time? Go further out. Go further out. That's okay. Okay, if you want more time and you want to go further out, as a trader, that's a decision we have to make, right? Because you can go to January, 428 days versus 64 days, but you got to pay. We can buy the 18s for 450, so it's 400 times the price. Are you willing to pay that extra premium in order to get those extra days? Maybe you decide you are. Okay, but do that exercise. I think you'll be okay with January. I think how these things work is, I know. That's why it's 428 days. I know. I think how these things work is it's going to be a hot story for a month, guys. And then it'll die down like everything else dies down. But we're going to take advantage of the spike in volatility, the spike in uncertainty. Okay? Make sure I didn't miss any. I'm answering questions, guys. Christian, am I considering short interest when making this trade? No, 0. Mario saying the only time I would consider unusual options activity would be if volume is greater than open interest for that day. Yeah. Mario, that doesn't make sense, buddy. If volume is bigger than open interest for that day. Right here. Boom. That's not open interest. That's not unusual options activity. I don't get feisty, but that's also why, hey, I'm happy to share my research. Okay. I'm happy to share the research. If it's something that interests you, cool. If it's not, that's, again, that's cool too. But I'm going to move on right now because I wanted to do a free class for you guys. And again, I'm not selling anything. A lot of this is for you guys to get more comfortable with me. My way of presenting and the trades that I share are going to be very different than other things that you've learned. So that's more of the reason, but just to let you know, I'm going to share another trade that would also probably end up on the week ahead. I still need to vet it a little bit more, but the second trade that I want to share with you guys, let me just check my positions real quick because I trade for a living and I want to make sure everything's okay. As far as my positions, I really don't have anything going on with the exception of Dillard's. Everything else is kind of quiet for me. Okay. The next trade that I like. HSBC. Anybody know why? Kelly, can I hug you? I'm going to read this out loud because this is the freaking best comment I've gotten in a while. Kelly Downey, guys, has been with me. I'm going to look when you joined, Kelly, because this is freaking amazing. And I challenge anybody else to have testimonials like this. Jonathan, I'm long lots of DDS in my 401k, over 25,000 in profits. I've used mainly 6 trade ideas from you in just over 2 years. My 401k was 55,000. It's now $290,000. Okay, that's not me saying that. That's a client. And I'll tell you right now how long Kelly has been with me. Kelly, that's freaking, I'm just unbelievable. I've heard a couple of stories like that, but okay, that's not, you can trade options in your 401k, James? So hopefully you guys can see from Kelly's comments, guys. Awesome. Kelly joined me April 29, 2016. Over 3 years ago. Over 3 years ago. 55, and it's now $290,000. Kelly, man, I'm so happy for you. Okay. Okay. Tenzin, you nailed it. Anybody else know why HSBC? Anis, yep. It's all Hong Kong, guys. So now, HSBC is the biggest lender in Hong Kong. Hong Kong protests are now talking about drastically affecting the price of real estate. HSBC has significant exposure in Hong Kong real estate, which is now pretty much the most expensive in the world. So as Hong Kong gets worse and worse, and now that they're talking about it taking a hit on the economy, specifically real estate, we want to find some ways to get short HSBC. So the research that I started doing was, for one, just reading articles like this, guys. HSBC's exposure to Hong Kong real estate, world's 6th largest bank. This was from a little bit ago, but earlier I was watching Bloomberg, And who was it? Sam Zell came out and said, there's no market for banks to lend their money overnight. They have a ton of exposure for Hong Kong real estate. That was this morning on Bloomberg TV. And that's why HSBC is selling off a little bit. But now, earlier we talked about relative value, finding correlations, like all that good stuff. What I like to do is once I find an idea, I want to find a correlated asset. And a tool that we use in the coaching program all the time, and I'm happy to share it with you guys, is something called Impactopia. Impactopia looks like this. You just put the symbol, I just put HSBC, I click on HSBC, and we can start to see correlated assets, 20 correlations above 20%, so it's the 20 most correlated names, 20 correlations below 0%, the 20 least correlated names. We could not exclude ETFs. EWU is going to be the highest correlation. EWU is iShares MSCI United Kingdom because HSBC is a UK bank. And so then I just take HSBC and look at it relative to EWU. Okay, go back to 2015. You can see the unbelievably tight correlation between these two. So right now, EWU is in the purple. HSBC is in the yellow. I have zero interest in buying HSBC. So I wouldn't be interested in doing a relative value trade like what I've worked here, where you buy one and sell the other one. Instead, I think it might be a pretty good time to look at EWU and to look at possibly, well, let's look at the options together. Oh man, Kelly, I would greatly appreciate that. My biggest issue is everyone's skeptical, and they should be. There's so many people out there, just garbage. So if you can give clients and members, and even non-members, more comfort, I mean, please, I would greatly appreciate it. DDS, which made another $1,000. Yippee! So HSBC is not what I want to buy puts in. I want to buy puts in EWU. I'd want some time. Oh my God, this vol is so freaking cheap. I just bought these for 70 cents. You guys are welcome to get as many as you'd like. These are really freaking cheap. I cannot believe why it's so cheap. This is going to be a low vol stock that I'm going to hold for 64 days. I'm only going to take it off when I can lock in a big profit. If this goes against me, just like we talked about earlier, I will do a 3 tranche kind of entry into this. I just risked $700. I'm probably going to risk about $3 grand on my first tranche. I just wanted to get a trade in. So again, my skeptics can see that, you know, we trade. Okay. Hey, Mike. Mike is just asking, what's the correlation website? The correlation website, I use it all the time. It's called Impactopia. It's just a great correlation tool. Okay, but just to give you an idea, every single week you get 8 to 12 trades. I just gave you 2. I just walked you through the reasons of why I want to be in each one of those. You could also do a spread where you buy these for 70 and sell these for 20 cents. Your risk would be 50 cents. Your reward would be $2. Not a bad, I mean, that's a good trade too if you want to limit the risk. Okay, you can tie it off. Two different styles of trade. They're both kind of doing the same thing. If you do the vertical put spread, you're going to be able to lessen your risk. If you do just the outright put buy, your upside is going to be greater, but it's going to be a little bit more expensive. I do. You go, absolutely. Vol at 12% is insane. But it doesn't, so the problem with this stock is look at the high and the low, Michael. 13, like the 13 cents. So there's gonna be plenty of days when it doesn't move. But if we can get any kind of news out of HSBC, I really think that the stock is gonna be forced to follow. But as far as volatility, this is kind of as cheap as you get. I mean, it wasn't that, I guess, I mean, it wasn't that long ago. 1 month ago, it was at 30. Vol's too cheap. That makes no sense. Right? If 1 month ago it was at 30, that's $2.50 less. And they're going to give us 64 days. And these are only, it doesn't make sense. These are awesome, guys. These are really, really good. But you need to be patient. Okay? I love you, but don't email me a week from now, Jonathan, do you still like EWU? The answer is yes. I want EWU to go against us. I want it to rally to 40 because then I can build a huge position. Okay? Good idea, though, right? Yeah, I mean, Mike, I appreciate that. I'd be really careful, guys. So I'm happy to share these trades. And I hope the message is coming across because what's more important to me than you trading these and, you know, making some money is for you to learn how we found these trades, the lessons finding these trades, and the quality of trades that you need to do to compete in the free market. I mean, it's competitive out there. You're competing with me on your trades. So I kind of want everybody to trade double bottoms and triple tops. We can beat them just by being sophisticated. Okay. Steve, I'm going to stay on topic here with these two trades. So that's what I got for you guys. I think that kind of covers it all. Again, I just wanted to do something. Thank you guys. Hopefully you get to see the difference in the quality of trades. I want you to think, you know, overall, guys, you know, if you would have to compare the two different ideas, which one resonated with you more? Water or Hong Kong? Water or HK? What do you think? So we have the water trade or the Hong Kong trade. I like it. It's kind of split. Good, 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 good. Just, yeah. So now my advice is for you to be patient. My advice also is to go and research. Watch back the recording, find, and then see what you can find. If you find something that's worth sharing that you don't think I covered, feel free to email support@mastersin trading. Okay? And then these two ideas are ideas that in the coaching community, we're going to riff off of. We're going to go back and forth. We're going to joust. We need people to joust and to discuss trade ideas, because when you have an idea, if you love an idea, you want somebody you can trust to give you a reason of why you shouldn't love the idea as much as you do, so you can weigh that advice and determine, hey, this guy makes a good point, or it's not a good point and it's not going to factor into my trading decision because I've objectively considered it. Those are good trading friends. Those are people that you want around you. And again, that's why we do the coaching room like we do. Okay? All right, my friends. Anis, just send me an email. The membership's $147 per month, but we're always running specials for annual and for lifetime. We're going to have some annual and lifetime specials coming out for Black Friday. So if somebody's interested, just send me a note. You can do it today. I could just give you those links before Black Friday. Okay? Kelly, man, I'm so happy for you. That's real money, dude. 55 to 290. I'm made my day, brother. Made my day. Hey, thank you all for coming out, guys. I really hope you enjoyed this. If you have any other questions, please feel free to email me, support@mastersin trading. This was a lot of fun, guys. Thank you. Thank you all.